Hello, everyone. Welcome to another Wednesdays with Wendy. Today, we're going to be talking about our fourth in a series of how to pay less in taxes. Meet with your tax preparer. We're going to talk about why you should meet with your tax preparer and what good things can come when you do that. But if you're just joining me for the first time, let me tell you, my name is Wendy Kane. I'm the owner of Kane Accounting and Financial Coaching. I do bookkeeping and payroll for independent contractors and small businesses so that you can have peace of mind at tax time and throughout the rest of the year. Okay, let's dive in. You should meet with your tax preparer. Now, why on earth would anyone want to do that? I know for many people, meeting with a tax preparer is probably right up there on par with going to the dentist, going to the DMV, those types of things. I don't know many people who consider it a fun time to go look at their taxes and see what the situation looks like for this year. But just like going to the dentist regularly, that is a reason why you should meet with your tax preparer. If you meet with your tax preparer, they have your complete tax picture, both your business and personal side. When I do your books, I can help you look at the business side. I can help you with estimated taxes based on your business income, but I don't have the personal side of your situation. I don't know about other income you have, your spouse's income, how much has been paid in other places, and all those other things. And so I can't give you an accurate picture. I'm not a tax preparer and I don't do your taxes. So I can't give you a full and complete picture of how much you might owe. This is why you need to meet with your tax preparer because they do have the full picture and they can give you an idea of how much, if you're on track to owe or on track to get a refund. Now, when should you meet with them? I recommend meeting with your tax preparer sometime a little bit after mid-year, around July or so, and then meeting with them again in either October, November, or December. The reason for this is once you have about half a year's worth of business income, you can predict how how the second half of the year is going to go, and you can go ahead and start making some plans based on what you've done for the first half as to what you want to happen in the second half. Then after you do that in July or so, you can come back in to the tax preparer in October, November, December, where you've got almost a full year's worth of information and you can refine those estimates, those evaluations. You can look at it and get a even better idea that you've got closer to 12 months of information. You can get an even better idea about what your taxes may look like come tax time next year. Really, with some exceptions, obviously, your tax return should not be a surprise. You should be meeting with your tax preparer throughout the year so that once the year clicks over to the next, once December turns to January, you have done everything you can while you can to make sure that you are going to pay as little in taxes as you legally need to. Okay, well, one thing I do need to mention, you may need to reach out to your tax preparer. They should reach out to you. Should they? Yes, they should reach out to you. But one, they are very busy. They're doing taxes from January through October with the extensions. Business ones are doing September, personals doing October. They're doing tax returns for 10 months out of the year. November and December are kind of slow for them. And so that's a good time to meet, not only because you'll have more information, but they'll be they have less to do during those times. But accountants are not good at marketing. So while they should be reaching out to you, they should offer tax planning, consultation, value added services. A lot of them aren't going to. We are accountants, we are not marketers. So you may have to give them a call or email them and say, "Hey, I would love to come in and sit down and look at some of this stuff." Trust me, they will be thrilled to help you because they don't want you to be surprised at tax time either. What happens a lot of times, and this happened when I was doing taxes, people would bring us their stuff in February or March, and they would say, "Oh, by the way, we sold a business, sold a piece of equipment, sold a lot of stocks, bought something, did all this stuff. I hope I don't owe a lot in taxes." And by that point, it's too late. Like I said, your New Year's celebration, you get to one, you shout Happy New Year. There are a lot of things you can no longer do. There's a few things that the preparer might be able to do on the tax return for the previous year, but a lot of options are no longer available to you if you wait until the tax season to bring your stuff to your tax preparer, and this is the first they are hearing of it. If you come to them in July or in the fall, there's still time left in the year where you can make some decisions and structure some transactions so that you're not hit with a huge tax bill come next April. Okay, let me see. Check my list here, make sure I went over everything. Yep, that's what you need to know. You need to see your tax preparer during the year. They have your complete tax picture, both personal and business. You may have to reach out to them. They will love to hear from you. Trust me, they will. And you have to do it before December 31st because if you wait until next year, it's too late. All right. If you want more tips like this, go to my website and sign up for my newsletter. I've got wonderful tips coming out every other week. And I'll talk to y'all later. Bye.